just going to show you this one. I like to do my tokens. I mean, you can do this on spot trading where you're outright buy them, and like I say, again, I'm on Mexi because their fees are really low, so I do like that. And then you can transfer them to wherever you want. You can transfer them to your MetaMask or crypto.com, wherever you want, basically, once you've purchased them. But another good way of doing them is to do them on the leverage, to be honest. And on this one at the minute, I'm on XRP, just keeping an eye on it because Bitcoin's coming down at the moment because of the grayscale where I'm offloading some, but it's actually something to do with the orb traders, what's causing that. That's more than likely going to end soon anyway, so I'm just keeping an eye on the price and price of Bitcoin, waiting for a bit of a turnaround and then coming in. But basically what I'm going to show you on this one, it's like I say, you can go on spot market, you can just buy them outright, that's what they are, for whatever you've got. But I like to do it this way as well. It's a similar kind of thing, but it's trading them. The isolated times 10. So whatever I trade or whatever balance I've got is times by 10. Now you do have a liquidation on that one when you do this kind of trading. And I'll show you how that works. So I'll show you the calculator quickly. Just pull that up. So at the moment, if you only had the 1 times, which is like when you're normally buying it, yeah. Let's just say, for instance, it's 50 cents, and it goes up to 60. Let's say we're putting 100 in. So on his normal trade, if we bought $100 worth of XRP at 50 cents, and then we sold it for 60 cents, it went up, we're looking at about £20. But on leveraging, times it by 10. When I'm doing a full trade, I do it on around about 25. But when I'm doing it as a buy, you have to keep holding them for a bit and then sell them for a profit. That way, I like to do them on a 10 because the liquidation is not as much. I'll show you that in a bit. So, like before, you were doing 100. So you're doing 100, and you're getting £100 worth because you're just doing it on your own trade. And to buy it at 50 cents, sell it at 60, you're looking at about £20. But if you leverage it by 10, then you can buy £1,000 worth, and your margin will be £100. And for that, you can see the difference. So for the same risk, £100, you're now trading £1,000 worth, and if it goes up to 60p, you'll be getting £199. If it goes up any further, if you hold on to it, it goes up to 90p, looking at about £800. So you can see difference in that. Obviously, the more leverage you put up, the more you're going to get out of it, but the more risk you've got. Liquidation, how does that work? I'll show you. So again, on a normal trade, you won't get liquidated. Whatever you've got is just worth less if it goes down. Put this in, just give me a second. You can see, so if you did it on one, if you were doing it on this leverage trading, which you won't be if you're doing it times 1, because you might as well do it on your own trade because you only get the same. The liquidation price will be 0.0 something, so it's literally down to crashing as such. So it's kind of the same as doing your own trade. But if we're doing it by 10, and we would be having the 1,000 on, because we're timesing it by 10. And this is free liquidation, by the way. We've done this profit one. So you had 1,000 if you remember, which again your £100 margin. Your margin, your liquidation price then would be 45.45. So that's all you have to be careful on, and that's where you have to keep your charts. So if you do it by times 10, liquidation, which I think I've marked it down here, 46. It's around about this area. You might have took that off now, actually, now I've done it. Yeah, but you're looking at around about here for being liquidated, which is why you want to wait while it starts to turn back around again. As you can see with the look at this. and this is on days. This is days, this one. So as you can see, it hasn't been as low as that since, well, it didn't even hit it then, to be honest. It was this one when it crashed right down, which was, what's this date? So the 20th. So it's on about, what, August, isn't it? 18th of August 23. So quite a long time ago when it did that. September it tried, but it didn't hit it. So it's quite a long time ago that it did that. So what you can do is you can put what you call an auto margin on. Just a little button where you click, and which I'll show you how to do in another video. And it's just auto margin, and what it does is when it gets down to such as here, provided you keep some more money in your account, as it comes down to here, then the auto margin will kick in and it'll add a bit of your balance in, whether it be a few pound or whatever, depending on how much you're trading, a percentage you're trading your balance, and can move this down a little bit more, so it'll keep you out of the margin call, which is nice if you are wanting to actually trade it. If you're wanting to keep it as such, if it's something you think is definitely going to go back up again at some point. But yeah, I think at the minute it's a good purchase, a bargain at the minute. I'm just waiting for it to turn around, that's all. I'll put it on hourly. You see, it's still coming down on hour. This is because of Bitcoin. So I'm just waiting for this little curve to come in. And then I might come in on that and put a few orders. Put a few orders below. So I just thought I'd show you that. Get more for your money out of that. I mean, you can go higher up on these. If you're doing something like this, I won't recommend it. I only do like times 25 really at the minute. And I just put them down in increments. I put some orders in and do it that way when I'm trading it. But if you're wanting to keep them a while, like I say, if you're wanting to buy them to keep them while they go back up again, then I won't go higher than 10, probably 5, maybe 10. So I just thought I'd show you that anyway. So right, I'll crack back on. Speak to you later.